The broadcast is now starting. All attendees are in listen-only mode.
Good NFP day traders, Warriors face. How are you? Hello, Paul, my friend. How are you today? So January is in the books. I've been talking about January would be a good month. If you notice, almost everything went up together: stocks, metals, oil, pretty much everything. Uh, February, I'm looking for reversals across the board in February. Is it starting today with the S&Ps giving up some, uh, could be maybe another push, but I'm looking for corrections in the S&Ps, maybe back towards 25.75 or so. The oil is something else that I think that we could get a correction in this month. May have started a day early. We went to almost a third drive line. If we get one more rally up here towards 55.5, that to me looks like a good opportunity. So looking for reversals in equities, in the oil market, in the precious metals market, could really succumb to a pretty good correction during February. It's traditionally called the February break. We're back inside the channel. Actually, I wouldn't mind one more high towards 1328, 1330, kind of give it a third drive look, this being one, this being two, which we got a confirmed high. One more high would do it. Silver's actually acting much weaker than gold today. So maybe silver doesn't, puts in a failing rally. And really the key to all of it is going to be the dollar. And I know we have a lot of dollar bears after the Fed, and this was a Fed, and they have a lot of reason to consider that. I just want you to keep in mind that, we pretty much held the 78.6 level, traded underneath it, back above it, comes in around 95.30. Yesterday, I talked about the euro being at 78.6. It came off pretty good, trying to recover, but still well under this level. I think 1480 might be tough. Pound's already giving up the ghost a little bit here, and the strength in the commodity currencies could be waning too. I'd look for maybe one more high. Don't have divergences in Aussie or Kiwi, I believe. Kiwi a little bit better. Let's look at the 1 hour. Would like to see another high for 1, 2, 3. Anyway, the theme being that, put on your reversal caps, okay? Because I think a lot of what happened in January will at least be corrected to the downside. Give me a Y if you're with me. You don't have to agree with me. I just want to get this point across. I want you guys to take advantage of me having done this for almost 40 years now. Okay, so I've seen some Februaries in my career. Reversal caps. Yeah, do you have do you have one, Zig? Not the Tom Terrific cap. That's for ideas. That's a metal one with smoke comes out the top when you come up with a good trade. All right, so that's what I'll be looking to do this month till proven long. Looking to sell rallies and almost everything. And ping pong, that's 3 legs. And, let's capitalize on, get your fib lines out and measure the rally that we had from late last year, early January to where we are now. And I think you'll see the potential in all these markets for real nice counter trend trades. So that's my plan for February. Just want to let you guys in on it and pay attention to, of course, as always, our team and their pattern and plays. If you just take our pattern and plays, you're doing very well. I know you want to be independent and, not just follow anything blindly, but you could always learn from the pattern and plays by going to the research of them. You go to the dashboard and then you look at active patterns in play, which looks like we have 7 working right now. There's Amanda, who really cleaned up on Pound Kiwi, getting a lot of play on Twitter for a great call, but that's just one call. She does it all the time. So, just following patterns in play, you're doing very well. okay? Because you have all stars, right? You have Grega, wins every year on FX Street. You have Steve. I interviewed him on FX Street, but didn't remember it when I joined ForexAnalytix. Andre is going to be with us today. So we're going to see some nice harmonic work. Blake, everyone knows Blake. Blake is the backbone of the company, attracted a big base for this company when it launched. And looks like we don't have anything up here from Stelios, who nailed the top in USD NOK and Euro Pound when us short-term technicians didn't think it would work. So really excellent team, guys. So Friday is a great day to join because you have all weekend. You have all weekend to learn to navigate the site. And also, don't forget, if you're dissatisfied with your broker, you're not getting a rebate check, you're not having your subscription paid for, reach out to Justin and Trent, and they'll fix it for you. I kind of booked, I didn't kind of, I booked an interesting speaker, and it's going to be Scott Yarbrough, who wrote a book recently. And, you look at what's happening, a lot of global warming talk, and, you still hear about that. But it has a lot to do with markets, too, because a lot of the old time masters used to follow what the sun did, and sunspot activity and solar maximums and solar minimums. So stick around for Scott Yarbrough. He has a counter argument to global warming. And I don't know, I was watching the news last night, and they said they found a big hole in one of the big craters that is 3/4 the size of Manhattan, and just that ice alone could raise sea levels. So there are things being said on both sides of the argument. We hear a lot more about global warming than we hear about a cooling planet. So Scott will be with us at the top of the hour. And Blake, I hope you had a good week trading and in other ways with the family. And I know you're like me because we're early risers, although Paulie is a champion, getting up at 1 a.m. How old is Paulie?
I think he's around my age.
Oh my God, he looks real young, But so do you. I'm not saying you don't, but I was thinking 30s, But
people look at me and they always see they're like, man, you look. You don't look like you're in your mid 40s. And I'm like, well, I'm half Asian. And then they see my bags under my eyes. They go, oh, never mind. They go, oh, you look like you're 70.
I saw some cream. I saw some cream on TV for that, buddy. Anyway, enjoy it, because people used to say that to me. They don't anymore. So
no, they don't. They got you nailed for 120.
Yeah, they got me. I definitely, I look my age now, so enjoy it while you can. And
that's
what do you think about my theory, Blake? Have you ever noticed February being kind of a negative month? I used to notice it initially in precious metals. They used to call it the Fed break, but all commodities did that. And I don't know the reasons why, but have you ever noticed it?
No, not really. It's not anything I've really paid a whole lot of attention to, frankly.
Okay. All right.
Yeah, but I'm not saying that there's no validity to it. It's just not something that I really pay attention to from a seasonality standpoint. So
a lot of these things are due, don't you think? Or something like that. Anyway.
Yeah, well, I mean, equities, they're really, I look at yesterday's break as pretty important, but what's more important is going to be, it's going to be what happens today. So, if we reverse and we go back below 2,700, well, we're at 2,700 right now, but let's say we get back below, let's say 2,680, that's going to be pretty alarming. If I was long equities or long risk, that would be something that would be of a big concern to me as a as an investor, because this move above these highs, even if you just do this, okay, this move above these highs, this is a complete and utter stop run for anybody who was short. So now, if for some reason, like let me just draw it out for you, I guess. If you take a pen here.
I mean, even if we don't have a crash, Blake, I mean, pulling back 38% of this run or halfway back wouldn't even disturb the fact that that may have been the low.
Yeah.
So, and that's good money from these levels. Or
you know, I have to say that my drawing is pretty good. You see that? I drew that. Okay, so let's say that the looks good, huh? Let's say, oops, I'm going too far, but let's say the S&P closes like that, then that's going to signal that we're, you know, on our way, you know, moving back down here somewhere. And again, that's just me just drawing right now and just showing you what I would be.
Look, the market's following your
oh, is that what you're? No, look, you know, I was drawing it and it turned out so good.
All you have to do is draw where you want the market to go.
Unfortunately, your P&L doesn't equate to what I'm drawing necessarily, but you get what I'm saying here. I'm saying if we show a failure here, it's going to be a pretty bearish event, I think, for equities. The flip side to that is, you know, we get above this 200-day moving average, we might see all-time highs. So I'm more interested to see how the market closes at the end of business today. So that's okay. What it's key for me. One of the things that really is the chart that I'm paying most close attention to right now is the dollar yen. And the reason why is the dollar yen really couldn't break 110. We broke at this up sloping channel that we've been in since that really big move in Asia, and the market's kind of rolling over here. So, you know, now that we're trading below 109, I would be a little nervous with equities. And if we have a weak number, now let's look at our numbers really fast. So we're looking for 165,000 according to Forex Factory, according to Bloomberg. Let's see here. We have 165,000 as well. And so that 165,000, you can see, like, you know, it's an expectation, but and this is, you can see jobs over the last, you know, over the last 10 years, this is what it's looking like. And you know, we might be rolling over here. And so and you know, as we are at full employment, according to most economists, that would make sense. But the problem that we have, and we just recently had, we have a few major issues. One of them being a trade war, and this ongoing trade war is going to weigh on sentiment for employers. You know, bottom line, I mean, you know, if you're as a small business owner myself, with, you know, all of us that are at ForexAnalytix, I look at the employment trend and go, you know, do I really want to add another contributor or employee if we're going into, you know, possible full employment, and then there's a trade war and blah blah blah. Those things don't really cross my mind as much as it would be for a lot of people, but as a business owner, you do think about that. And if you're a CEO, you do think about that. You think about this ongoing trade war, you think about the government shutdown, you think about you know, the slowdown in manufacturing and everything. So, you know, employers tend to, you know, also be very sensitive to economic data. As we see economic data starting to slow globally, there are question marks. And so there might be question marks as far as,
like, I hear Ronnie and Jack Schwager are looking for a job. Would you take them on?
Yeah, I would take them on. Hell yeah.
All right. That's fine.
It's the right people, though, right? It's the right people.
Yeah. All right.
You know, I don't know if I'd bring on Joe Schmo, you know.
Yeah.
But
oh yeah, him.
But anyway, it's just something that I think that we have to be cognizant of. And if the numbers come in a little weaker than expected, and everybody's probably thinking that because of the government shutdown, because of the trade war, things might be a little bleaker. But now the question is how bleak. Let's say we only create 150,000 jobs. Well, that's not going to be much of a. I don't think you're going to see much reaction in the dollar. Unemployment's expected to also tick higher. I think we're expected to go to 4%, possibly 4% unemployment. Looks like Forex Factory is expecting 3.9%. Let's see, investing.com. Whoops. Calendar here. Investing.com is also expecting 3.9%. Bloomberg is also looking survey of 3.9% as well. And let's say that ticks up to 4%. And let's say we only create 100,000 jobs. Now, that might be a little bit concerning for dollar bulls. And so I'm paying a close attention to the dollar yen because I think there's a potential that we get all the way down to 108 today. 108 is the 38% retracement of this entire rally. And remember, we've broken out of this down channel. So if the number is too weak, I'm going to target the dollar yen to the short side. That's my, as I was telling the guys and gals in the chat room, that's going to be my weapon of choice for today's non-farm payroll. It's a little cleaner. If I look at the euro, I can go, we stopped at the 78% retracement. We got a, we got a Fed that's a little dovish, and but how Europe's got its own issues. So you saw the German German numbers this week, and you're seeing all the data that's coming out of Europe. It's like, do I really want to be long the euro, or would I rather be short the dollar yen? And so the dollar yen makes more sense to me, especially if you have the S&P that's really, not going to get a foothold above 2,700. So the dollar yen is really what I'm paying close attention to. And while I'm at these charts, let me take a real quick look at what we've got going on for the majors here before Steve comes on to cover the non-farm payroll and Stelios. So if you're looking at the euro dollar, by the way, I bought the euro yesterday at 114.52. I sold it at 114.42. I didn't hang around long enough in the euro. I know I wanted to be long there, but I was long in pretty aggressive size. And then I had a long euro Aussie too, which I took off the table for a profit yesterday afternoon. And obviously I look at the euro and I'm like, man, I should have held on to it, but I don't live in shoulda, coulda, woulda world. At the time, I was like, I don't really want to hang on to the euro dollar. But, looking at it, I think it's pretty clear. This is your support. So as long as the euro trades above there, I still think there's a risk of us moving higher back up above 115. But I'm not super convinced. And like I said, I think the cleaner trade right now is trading the dollar yen. So here's the cable. The cable actually broke an uptrend line this morning. The UK manufacturing, I think it was manufacturing PMI. Let me double check that. That was the UK manufacturing PMI came in. Yeah, thank you, Stelios. It came in weaker than expected. Broke us below that trend line. We took a little bit of a dip, and I think the cable could expose a move back down to 129.50. I am a buyer here, just so you guys know. I'm a buyer somewhere down here. I'll figure that out into next week, and I'll probably brief you guys more on the week ahead video. For those of you that watch the week ahead video on Saturday or Sunday, I'll probably outline that. But that's what I'm looking at with the cable. That doesn't mean it can't go up from here. I'm just saying that I'd rather be a buyer down here than, a buyer where we're currently at. The Aussie, the Aussie has been showing some divergence on this rally. We have not gotten overbought, but we stalled at the 200-day moving average. That was also our chart of the day yesterday. If you follow our blog, which is free. And, I think as long as we're above 72 cents, it's still pretty bullish, but if we drop back below 72 cents, I think Aussie bulls are going to be like, okay, that's, it's been a big enough bounce and it's time to get out of my longs. I think that's what would happen if we break back below 72 cents at this point. The Kiwi's been unrelentlessly strong. I mean, this thing has been berserko strong. I don't know who the hell continues to buy this Kiwi and why, but it's just it's I don't know if it's the cross braid effect or what, but if you look from a harmonic standpoint, I bet Andre will have something to say about this today. This is basically, I guess you could call it a Gartley right here if we stop right where we're at. Now, I'm not brave enough to just short the Kiwi right now, not ahead of the jobs report. I just want to say if we end up stopping here, then that's probably going to be a good reversal spot. Otherwise, you're probably looking at a move that'll be, something that looks like that, which would be a butterfly pattern versus a Gartley pattern, where you could, fade it up at 71 cents. And I'm sure there's a nice fib retracement that coincides with that, I would assume.
I vote butterfly.
Yeah, I mean, it's possible. And yeah, 618.
Nice correction.
Yeah, I mean, so that looks, realistic that we could head up towards 71 cents. And you got the dollar Canadian that Steve will talk probably a little bit more about here in a few, but we're at a 618 retracement. We're really not bouncing at all, and the dollar Canadian remains heavy, and it looks like the bear flag points us down to 129 or maybe even 128 change, but the bear flag pattern looks pretty strong there with the dollar Canadian. The dollar MEX is trapped in a triangle. I am long currently. The Swissy has been just rejecting the 618, and lastly, and I know I talked about it already, but here is the dollar yen. Now, if we have a strong piece of data, I'd probably be more apt to short the euro. But if we get a weak piece of data, I'd probably be looking to short the dollar yen. And I say that because the dollar yen is broken as long as we're below 109. I'd rather be on the short side of it. The one concern I do have about the dollar yen is gold. Gold has made a great rally, and we are at the 78% retracement currently. RSI is extremely divergent. I'd be a little nervous about trying to short gold up at these levels, but if you ask me would I be a buyer right now, the answer to that question is no. So if gold does sell off, that would argue that the dollar yen is going to go higher. So I don't. That's the one issue I have with shorting the dollar yen. But on the flip side, it's bullish. I mean, gold's bullish right now. It is bullish despite the divergent relative strength. We could surge up to 1340, and relative strength could continue to push up towards this resistance that you see in relative strength. It's not like we haven't been higher than that, or we haven't been up there, multiple times. So it's not like we can't.
How are yields looking to you, Blake? Because that's actually the yen has been following that more than the market.
Yeah, I mean, if you look at the 10-year and the 10-year yield is rolling over again, but a lot of this, a lot of what we're following in bonds right now is what's happening in the curve. So if you look at the 2s versus the 10s versus the 30, so it's and we've seen that the short end, the 2-year, make a much more aggressive move than the 10 and the 30. So but yeah, I mean, I think you have to follow yields and precious metals as well. So, but with
looks like a higher low to me, and we might get a pop to 290.
Well, I mean, it looks like it right now. Yeah, we have to hold here. That's right. That's exactly right. So, and somebody asked, or we had pending home sales yesterday that were like berserko good, and everybody's like, "Oh my God, what happened with home sales?" So I'm like, I'm going through a real estate transaction right now, and personally, I'm basically selling one home. It is, but the market has been more buoyant as of recently because because of rates, and because rates have slumped. People are like, oh, I gotta buy now while rates are low. So I think there's that's supporting the real estate market. But anyway, if Dale, if you're right and rates make a higher low, then we could be heading back up towards 3%. But we'd have to have a pretty big rally in equities too to support that. Anyway, I'm going to pass it over to Steve and Stelios, and I'm going to get ready for non-farm payroll. Remember, dollar yen is really on my radar here, and then the euro dollar. In the event that we get some strong data, I think the euro dollar might be a better short, or maybe even the cable. So, you guys have a good luck today, and TGIF, and I hope you guys have a great weekend. I know not only Steve and Stelios are here, but also Andre is going to be joining you guys today. Talking about some harmonic patterns, and so make sure that you talk to him, guys, about the what did we just cover? We covered the kiwi. Yeah.
All
right.
Okay, Blake.
Have a good weekend. Have a good weekend, Blake.
Yeah, have a great weekend, guys, and good luck.
Thank you.
Hi, Steve. Stel. Before you get going, Stel, with Steve, cover your ears. Stel, will you be my Valentine?
Any day.
I didn't want Steve to get jealous. That's why.
Oh my God.
All right. Anyway,
Okay.
take it away.
Aren't you a little bit too old to be changing?
I told you I came out of the closet the other day. I have claustrophobia, so I came out of the closet.
Okay. So,
I got a couple of things to say. Yes.
Tell us what we have before we get the data.
Yes, we had some prints today. PMIs. Actually, first of all, Eurozone CPI 1.4% year on year as expected. Well below 2%. And then we had some PMIs, and we're getting quite a few sub 50 PMIs now, which means
Italian PMI even lower.
Yes, Italian PMIs at 5-year lows at 47.8, and UK actually still higher than 50, but worse than expected. German worse than expected. The outlier was Norway. Actually, came in.
Germany PMI second month in a row that we are below expansion territory, below 50, right?
Exactly. Yes. So just something to keep an eye on, and PMIs are leading indicators, and the Italian one, especially for me, it's pretty important. It's a huge economy, and what Italy is going through at the moment. So just keep an eye on it. And actually, I see Greek manufacturing PMI is at 53.7. Come on, we're doing well.
Yeah. Right.
And and that's it. Really, not much else.
What did they manufacture in Greece?
More or less nothing. So you don't have to worry about it.
Debt, good one.
Where's the debt factory? I want to get a job there.
we manufacture civil servants as well.
Yeah.
We're very good
at large quantities.
Yeah.
What a booming country.
Absolutely.
And then we go and we tax the private sector. I did a rough calculation with my wife who works in the private sector, and I think she pays all in about 70% tax, direct and indirect, on her income, which is absolutely ridiculous. But anyway, it is what it is.
Be a little bit patient. From what I see, US is really looking forward in experience socialism as well.
Yeah, so, we'll have those taxes in 2020.
Give it a couple of years.
You need a change of presidents, a Democratic Party. They're talking about.
Unfortunately, I consider that more or less a given, because how many presidents have won a re-election while in a recession?
I don't know. None.
I guess none.
Roosevelt.
Might be the case. Anyhow, it's okay. By the way, we
we
are
go.
just less than a minute ago from
20
data.
The ball is
Okay.
dropping. Right?
Average early earnings as well, quite important today. And
Yes. Yeah, expected 3.2% year on year, right?
Correct. Yes.
Okay. Let's see what we get. USD yen on the bottom right there. Euro USD middle.
Okay, here we go.
Pound USD.
304. That's big. Although there's a big revision from last month. Average hourly earnings in line year on year. What are we doing?
304, double the expected almost. So
Yeah,
very strong number.
Remember though, the previous month's number has been revised down by 90,000.
Yeah, but still it's more than expected. Unemployment rate ticking up once again because we have another increase in participation rate from 63.1 to 63.2. So that's not a bad reason to. But we do have average hourly earnings month on month weaker than expected from 0.3 at 0.1. So that's somewhat negative because it's a leading indicator of inflation. Overall, the data are quite good, with the exception of average hourly earnings. There's no question about it. But so far, we're not really seeing a reaction. Let's go down to a 4-hour chart. So far, the market hasn't really responded. Here's the euro. Oscillating there. Let's have a look.
Think about it. The number came in 130K better than expected. Then the revision was 90K lower. So it's it was better than expected, but not hugely better than expected. But anyway,
but okay, it's still a huge number. I mean, right? More than 300. Of course, it can be revised down again. There's no question about it. But it's still more than expected. And even counting the revisions, it's a positive number. Participation increasing is also quite a good thing because participation was at record lows for a long period of time, but still the market is not reacting to it. I mean, now we're seeing a little bit of USD strength here in the euro, here in the USD yen, but really nothing to write home about. A little bit here in the USD CAD at the bottom. Those are 4-hour charts. Let's see what the Aussie and the Kiwi are doing. In response, a little bit of USD strength as well here, but nothing to write home about so far. The market doesn't seem to be, now the dollar is strengthening a little bit more.
Yeah.
But I would still expect a much bigger reaction from this kind of data. Keep in mind that we have more data coming within the next couple of hours. We have manufacturing PMI, we have ISM manufacturing PMI and employment, Michigan consumer expectations, consumer sentiment. So we have data coming through in 75 and 90 minutes from now. So I guess we should see what we get from that as well. Okay, so far not too much of a big reaction. The stocks are getting a bid now. Let's go to the S&P. S&P yesterday actually found resistance at the confluence of resistance we're talking about here, the 161.8% fib extension of the triangle and the 78.6% fib of the last move lower. So far, this looks like a consolidation. We might push even higher. I have this horizontal support resistance area at 27.35. As long as we remain above 26.76, we have to remain constructive. As Gregor was showing yesterday as well, this is likely a fifth wave, so I think this is not the place to be buying anymore. I would be expecting a pullback. We've been saying that after a push through the triangle, you can expect this to be, a terminal thrust. So, some kind of a bigger correction should come following that. But, seeing the data so far, it's not very likely that we're going to get that kind of reversal today on a Friday. We might see something like that, with a new week, new month. Let's see what we get, Monday onwards. So
yeah,
now,
you're a fan of Steve. You're a fan of markets turning at the beginning of the month. I've heard you talk about that.
oh yeah, we get statistically we get more often highs and lows at the very beginning or at the very end of a month, or at the very beginning or at the very end of a year. So yeah, it's a period of time that you should be a little bit more careful. I mean, when you see reversals in days like that, you should find them a little bit more credible. Yeah, you should take note, exactly. I mean, statistically, they're a little bit more credible than in any other case. Now, having to do with the USD CAD, Blake was mentioning it before. Personally, I see another pennant here. So I'm expecting, more continuation to the downside. My target is 130. So I think, that this is still moving according to plan. Let's have a look at USD NOK. Let's go through a few of the pairs. USD NOK finally breached this area, which is also the head and shoulders formation neckline. We're retesting it now. So if we fail from here, there's more downside to expect from there. You can see a very nice, very clean head and shoulders formation here. Go. Here it is. Shoulder, head, shoulder, neckline, continuation, right? So, if we get rejected from here, from this 845 area, I mean, if we get a confirmed rejection, you can expect more downside. The target of this head and shoulder formation is, roughly in this area down there. So, there is more downside to come. Let's have a look at crude again, and then we're going to go through the metals, and then we can have a look at some of the crosses. Also, let me open the question box and see if you want me to look at something specific. It's seasonal. USD/MXN. Yeah, absolutely. We're going to have a look at the USD/MXN. So, crude still above this broken triangle. I would expect more upside from here. So, I would expect something like this, perhaps a move towards the 127% fib before lower. Okay. So I think this still looks good as well. We are seeing some RSI divergence, but nothing magnificent to write home about yet. Now, having to do with the USD/MXN, I think that the USD/MXN is actually still bearish, and the reason I think that is because this is quite obviously a triangle here, right? There it is. So, I expect that the chances of at least one more thrust lower are rather decent. And, with that thrust lower, we can actually come down and retest this larger symmetrical triangles support. So I would want to see one more move lower from the USD/MXN. I think that, it's quite likely. So as long as this triangle's resistance zone is holding, I think that, looking lower is quite a decent risk reward opportunity. I mean, I would definitely not be buying it unless we break above it. Okay, let me say it like that. But even if we break above it, depends on what kind of a move, because that might just end up being some other kind of corrective formation, because so far, this does not look like a reversal. We had a strong move lower, and now what are we doing? We're consolidating in time. We're consolidating. We have a horizontal consolidation. The pair is actually coiling. So, it's natural to expect that a breakdown from here is more likely than not. Okay. So let's go to the metals. Gold found a reaction yesterday at that area, but so far, to be honest, this reaction doesn't look strong by any means. So, I wouldn't try to fade it unless we get some bigger confirmation, something that is clearly visible on the daily. Silver got a bigger rejection than gold. So, silver, definitely a better reaction. If you remember yesterday specifically, at the time of the webinar, we were trading within the zone, and I said that, silver just actually made it to the zone that was of interest to me. And we did get a reaction so far from there, but I would at least want to see this 1580 area give way before I can I can start feeling more comfortable that we've found a high. Until then, I think we need to remain somewhat cautious. Let's go now to the daily chart for the rest of them. Copper, there it is. Copper actually broke this triangle, so it is very likely that we have a different type of formation here. So now we are looking at the potential of a bullish breakout. Actually, it's more probable than it was. It can still prove to be like a consolidation, like a rectangle that will have a continuation lower, right? But since it's not a triangle that we are testing anymore, you need to be aware that this can actually end up in any of the two directions, right? We break above this 280 something area, then we obviously have a bullish development, and a rectangle should produce upside or downside, depends on which side it breaks, equal to the height of the formation, which means that it's normal to expect that either if we break lower or higher, we should have a very decent continuation. Especially if we break lower, keep in mind that a little bit lower than this lower boundary of this rectangle, we have the neckline of a potential large head and shoulders formation. So that would be quite an interesting development. But being where we are at the moment, I think being neutral makes sense. Now, palladium, once again finding a bid. As I was saying yesterday, unless we break below this ascending channel, it's quite dangerous jumping the gun. So you need to respect the uptrend as long as this channel is holding. Now, if we get a breakdown from this channel, I think there is a decent amount of retracement to look for. But until that happens, nothing more than that that I can say. Gold silver ratio still holding above this confluence of support. So let's see what happens from here. As we've said, usually this ratio overperforms when metals are not doing that well, and underperforms when metals are doing well. So obviously, if we start breaking through important supports, that's more or less a bullish sign for what the precious metals will be doing. Now, going to the crosses, natural gas. Yeah, sure. We have questions. Natural gas, Euro Swiss. Okay, let's take them one by one. Okay, Euro Swiss. And thank you for reminding me. That's why I'm going there first. Euro Swiss. Yesterday, I've been covering this in the chat room as well. Yesterday, I actually tagged this resistance area, and this is what I had drawn. That this is an area of resistance. So you might expect a reaction, and if we actually break above it, you should expect some continuation. So far, we did get a reaction, and that was initially a rejection. So being long near this 114.30, 114.50 area is doesn't make sense from a risk reward ratio, right? So let's see what happens from here after yesterday's rejection. Let's see if we're gonna find the bid again and try to take it out or not. But definitely from a risk reward perspective, 200 daily moving average is also approaching, entering this zone. So from a risk reward perspective, looking lower makes sense. Now, if we break above there, then you should expect a continuation to the upside, and that should also help use this Swiss do better. Now, we also have a question about euro against the Chinese yuan, and I've had some drawing somewhere, but I need to find it. Bottom line here, you can see it. I can redraw it. It's very easy. Bottom line here, from what you see, I would have to say that the move higher, as with this move higher, right, is not impulsive. It's corrective in nature. So you can even see some momentum loss here. So I would be quite careful with this one. There is there's a very easy to read ascending trend line support. So, there are two options here, either rebound again from there, but if and when at some point we lose support from this trend line, I would expect a continuation lower, and it can end up being, quite a strong continuation lower. So I think this is what you should be monitoring here, right? The move lower is not impulsive yet, to be honest, either. So perhaps, more oscillation before something actually happens, but this is not ready yet. So, not much to do. You can buy, as the closer we get to the channel support, the more appealing buying is, obviously, because, you have a place to put your stop loss. And, if you get the breakdown, then playing the breakout is also definitely appealing. That's it. Until then, I think not much else to talk about here. USD Swiss, the move lower in the USD Swiss looks corrective to me at the moment. So I wouldn't be surprised if we got continuation, right? And as I said, if Euro Swiss breaks that 114.50 area to the upside, that's also definitely going to help the pair. So, you want to play the USD Swiss, also pay close attention to what the Euro Swiss is doing, because it's going to help you trade it. Let's see what else we have. Yeah, I'm going to have a look at the crosses, pound, etc. We had a question about natural gas, so I think it's in gas. Yeah, it is. So natural gas, quite an interesting price action here, right? And I have to say that it doesn't look that good, because this looks to me like an ABC, despite the very, very bullish nature of that move higher, which imploded even some funds, etc. I have to say that the fact that we reversed so strongly and we re-entered this triangle is definitely not a good sign for the bulls. Unquestionably, we have very strong support area at 258. So, selling the closer we get to that makes no sense. But if we do lose this 258 area, I think there is more pain to come, right? So, this is a key area. What happens from there is very significant. So, you want to be buying against 258. It makes sense from a risk reward perspective, but if we break below it, I wouldn't be trying to, to play to the long side, because that can be a very slippery slope following that. My pleasure. Okay, let's go now have a look at the crosses, because actually they look quite good. So here it is. I was talking about that yesterday. Euros seems to be producing continuation of what looks like a clean cut bear flag, and Euro Kiwi breaking down below there, so in essence invalidating the possibility that that was some kind of a pennant. So it now looks also decently bearish. And I'm going to cover also pound Aussie and pound Kiwi and pass it to Andre, because he's here and he has some setups for us. Pound Aussie breaking below this today, breaking below this ascending channel, and that's definitely a bearish development if we confirm by the end of the day/week. And pound Kiwi also breaking below. Now it has completely invalidated. You remember I closed, I think, yesterday the conversation by saying, how a head and shoulders formation or an inverted head and shoulders formation can actually masquerade a triangle, in this case pennant. And as you see, we seem to be confirming that, in which case I would be looking quite lower, at least for a retest of this larger ascending channel here. Although I have to be honest, this actually points to a break below that as well, right? And that will be a very bearish development, simply because if we look at the bigger picture, this looks a strong move lower, and this move higher has corrective characteristics. So I wouldn't be surprised if that's the next move. Okay. So thank you very much. I'm going to pass it to Andre, and I'm pretty sure that he has some interesting stuff for us. Andre, I'm making you panelist, and I'm passing you the screen.
Hello, traders. Good
Hey,
afternoon,
Andre.
everyone. Hello, Steve.
Hey, mate.
Yes.
You have the screen, right?
Not sure. Let me.
I saw something briefly, but
go.
now it disappeared again.
Yes, I think I mistake. How can I select? No one can see your screen. Click here to share your screen. Okay.
Perfect. We can see you. We can see
you. You can see dollar index?
Yes.
Okay. Let me just push this over. Well, let me start with dollar index because it may create some impact on other instruments related to dollar.
Yeah, absolutely.
So previously, all those charts that I will show you or that I will share here, they are all published inside ForexAnalytix. So for those who are here for the first time or as a visitor, you can always subscribe for $1 and you can check all those charts and other teammates' approaches. But all those charts that I will show you, they are all published inside ForexAnalytix. So this is Dixie. Dixie has bounced from the 161.8 extension previously at confluence with the golden ratio. It has created some bounce and it has found support again at 224 extension, the shark pattern. So another published chart there, and the price has bounced from this level. This is also above the monthly resistance printed previously, and we see the market rejecting now the previous structure support, the 161.8 extension previously acting as support level. It's now acting as a resistance, and we have this small or minor, for now, descending trend line crossing those highs, which may force the price to retest the lows. At least I expect a retest of this monthly resistance and eventually a new low below that level to reinforce the previous support printed below. From breaking those levels will increase, as always, will increase the probabilities to sink and to trade even lower. Before that to happen, I can expect a pullback before that happens. But based on what we have now and based on those two advanced pattern formations, those targets are positioned at 50% retracement. So we have the previous daily resistance above. We need to adjust our Fibonacci retracement below to the most recent lows. The default target for the shark pattern is the 50% retracement. It will retest again the 4 hours, the previous 4 hours structure resistance. It's a fractal resistance level, and eventually the market will retest that level before printing new lows. So I'm saying this just because it's the default target for the pattern. I never know when the pattern will work or not. I never know when the pattern will fail, obviously. But we have always a default target, which allows us also to identify our limits. So we never enter the market to lose more than what we expect to win. Based on that, this is my minimum expectation for dollar index, a 50% retracement from these structure highs to the most recent bottom. And from there, we will see. For now, we need to break this descending trend line in order to increase that probability to trade higher on Dixie. We have also silver. I took this short on silver on a, let me see, a 12 hours time frame chart. We have a clear bearish divergence between those two tops. Obviously, the market can trade higher, can break my stops, can trade above my limits, but we have what I consider a perfect shark pattern. Actually, we have both levels reacting very well. So I will not be surprised at the same reaction at the 161.8 extension with the price printing highs above that level and then a pullback. I will not be surprised to that to happen on silver, but this is the completion point. Usually, when the market prints me those type of behaviors, what I mean is a price will respect one first time the 161.8 extension level. It will pull back, rejecting to trade the default targets, and then bounce immediately to the 224 extension. Usually, I will see a reinforcement of the previous structure support trend line as targets. Obviously, as always, we have a default target for the shark pattern at 50% retracement, which will produce, or which may produce us the 5-0 sequence, the 5-0 pattern. What I mean, let me push just a small line here. So we have this first, the swing that prints a new low, the 224 extension, the 50% retracement, and this should produce a more upside momentum, very similar as previously when the price reaches the 161.8 extension, printing a new high and a pullback. Here, the price has rejected to trade the 50% retracement. I expect that to happen from the 224 extension, or at least a minimum, reinforcing this ascending trend line. Note that previously, as I said before, we have this bullish divergence between those bottoms, which has forced the price to retest the highs as expected for the bullish height and divergence. At a minimum retest of the previous highs is the expectation. Obviously, the market will print a new high above. I printed a new high above, new higher high. I can, based on the most recent bearish divergence, we can, and later we will face this as an eventual false breakout. And if the market violates this 50% retracement, I will start to project the next reversal or eventual reversal level below, between the 161 and 224 extension again. So I will try to. We need to wait. Obviously, we need the price to violate the most recent structure support levels, and if that happens, I will search for another reversal level. This one, the first level at 161.8 extension, and as we can see, the 224 extension will put the price retesting the monthly support again, which for now it's completely nonsense to forecast that to happen. We need to wait for those structure to break. At this point, we have this. I have this pattern printed. I need to respect my criteria. My target at 50% retracement. Obviously, we can try. And that's what I tend to do, identify the first Fibonacci level as the 38% retracement. That allows me to identify my minimum target for the pattern. And that allows me, as always, to identify also my maximum limits, obviously considering a one-to-one risk-reward approach and trying to minimize that one-to-one risk-reward approach into a friendly situation to trade. So this is silver. Are you there, Dale? If you need to interrupt me, please make yourself.
Okay, you have a few minutes, buddy, and you're doing a great job.
Yeah, this is oil. Oil, as I published it before, we have these not represented here, not printed here, but we have these heads and shoulders. Also, Blake and Steve mentioned it before or earlier. So this heads and shoulder formation, I was expecting a deeper pullback to respect these lows of the left shoulder. That's how I like to see those price behaviors. Let me try to get a clear picture here. So those lows, I always like to see the right shoulder at least trying to retest those lows. In this case, in an inverted head and shoulder. At this moment, we are trading. I believe you mentioned it before, Dale. These potential three drives. No.
Yeah.
We have a clear three drives in divergence, printing divergence between those tops.
Yeah.
Well, at least it seems. No.
Yeah, I have a trend line that would allow for one more push, but the form is there definitely.
Yeah. Okay. Okay. One more push above this one.
It could. Yeah, if you just draw a straight line off the previous two tops, it didn't quite get there. But close enough for government work. You know what I mean?
Yeah. Yeah, I always like to
perfection at the crap.
I always like to consider the RSI tops also. And since we have three already, I will not be I never get surprised with new highs or with new highs above the one that I was shaking at that moment. So I have this eventual 3 drives pattern. But if you go, it's not relevant for now. Let me go into 4 hours time frame and try to share my view here. Actually, I need to decrease my time frame into a 2 hours time frame. So note this bullish ascending channel, this bullish ascending parallel, for now, a parallel channel that we can draw between those lows and the most recent support, daily support position below. So this is a simple configuration of our eventual ascending channel. And we are now, as published before, the market has failed to nail, actually the market has nailed the 1/600 extension, but it has failed the default Fibonacci level to start to sink from there. This is the shark pattern, which may also force the price to trade above. We have also actually we don't have bullish divergence for now between those lows. Oh, actually we have bullish divergence here between the most recent or the previous bottoms, structure bottoms, the lows, and the most recent ones. So the price, as you can see, the RSI has synced and the price has rejected to follow that relative strength index. So which suggests us at least more bullish trend continuation or more bullish momentum, but at the same way, and my minimum expectations for bullish divergence or for bullish hidden divergence is always the most recent structure. I don't use the bullish hidden divergence to project the price above. I use it to project at a minimum retesting the highs as a double top, as if you want to call it like that. This is my minimum expectation, and we can use always the Fibonacci retracement level between the highs and the most recent lows, and we can see we are now threatening the 38% retracement from this structure, this fall. So if the price rejects to trade the 38% retracement, and for those who are trading on a lower time frame, you will see this level corresponds to the previous structure support level. So if the price rejects to trade above the 38% retracement, obviously it will suggest more downtrend or downside momentum at this point.
Okay, Andre. What a great review, and with your silver look and your crude look, it kind of lines up with a lot of these markets that had great Januaries could correct back to the downside. So, thank you for your presentation, and it adds conviction to my theory. So I appreciate your work as always, Andre. Have a great weekend, and stick around. In fact, Bellu, if you're here, I know you're in Finland. It's cold, and you guys in the UK, it's cold. So I'm bringing in Scott Yarbrough right now, and you want to stick around for someone who doesn't believe in global warming here. So Scott,
for sure.
Yeah, it's going to be interesting. He actually, with the weather we're having in the Midwest, he's not the only one. I've read about people predicting a cooling of the planet rather than a warming of the planet. So, Scott, I just made you the presenter.
Thank you, David, and welcome.
Thank you, Andre. And Wade, you're calling in, so I think you have to see if I could unmute you. There you are. I see your screen. I can't hear you yet, Scott. There may have been a PIN number for your if you call in. You were able to do it right on your website, but I need some volume, buddy. Maybe go up to your audio pin sent. So you have to hit enter the audio pin. And right now we're seeing your emails. So I don't know if you want to be showing that. Scott was invited to join the online summit February 2nd. Do you see the pin, Scott? You have to enter the pin. You're very welcome, Marius. Louise, you're very welcome too. So Scott, did you see the audio pin? It was sent to you? Audio pin. Audio pin sent. That's what I'm getting.
Me now, Dale.
How about now? Got you,
Dale,
Scott.
can you hear me now?
Yeah, I got you, Scott. Can you hear me?
Yep, that's good. Yeah, I had to hang
right.
up and call back in to put the pin in.
Okay. All right. Appreciate you being with us today, Scott. Very nice to meet you. You may want to show a different screen. You're showing your emails, I believe, or a calendar or something like that.
Oh, that should
You want
be
to show a copy of your book? The share screen gives you a chance to select the screen, and I'll have this edited out.
All right. Well, let's just do this. All
Or
right. Can you see that? Can you see that now? The
no,
cycles?
Same screen.
Huh. That's interesting. That's not
So
what's up.
unshare it, and then click the share, and it'll give you a choice of which monitor to show. So unshare and then share again.
Yeah, see, I'm new to this. I'm new to presenting.
I know, it's okay.
I've done lots of webinars, but
I'm a
never
dinosaur
been a
too.
presenter.
Okay. Well, then you're stretching yourself today. So I tell you what I tell you what I'm going to do is I'm going to show your website.
Sharing.
Yeah. Oh, there you got it. Share. Right. And then it'll
All
show
right.
you what
Show
screen.
screen is paused. Stop showing. So it's paused. Now where do I go back to edit?
Share screen. And there you go. We got the cycles.
All right. Very good.
All right. Congratulations, Scott. I tell you, I started to freeze up here, and I was having a mini ice age in my apartment today. So
that's what's going on. Let me tell
right.
you about me, Dale. Thanks, first of all, for having me on.
Okay, go ahead.
In 1975, I was a registered representative of the New York Stock Exchange, Series 7 and Series 3 licensed, and I did that for about 15 years.
Yeah.
So I've been around the market, so all this stuff you guys are talking about, I understand.
Good.
But I'm more of an
you had your own website.
Anything else.
You had your own. You had your own website. I read. Yeah.
I had for 5 years. I wrote a nightly market letter called Market Highs and Lows, and that was fun. But boy, that's grueling work. Being on top of the markets day after day after day after day, year after year after year. That's tough. But I've been an entrepreneur for a long time, and in 2014, I went to. I was divorced. And I lived in Michigan, and I decided I was going to go to Puerto Rico for the winter because I didn't want to do the cold. And when I was there, I was still writing my market letter. And one of the things I was looking at was natural gas because it was so darn cheap. And I thought to myself, if I could figure out maybe what the longer term weather might be, I might be able to coach my subscribers into, a good trade or a longer term investment in natural gas. So I started reading everything I could find, and for about 4 months I did nothing but read and look and try to analyze this market. And after that point in time, I came back, and it was just about 4 years ago I wrote the book, and so it was 2015 when it was published. And basically all the things that I looked at, and I found about 3 different things that kind of all pointed in the same direction.
Was one Wheeler?
No.
Okay.
My work basically came from 3 different areas that all kind of seemed to point in the same direction and confirm each other. And that was NASA's work. It was work of a group out of the UK, and it was the Russian scientists who have a way of measuring kind of the budget of the heating and the cooling of the Earth, called total solar irradiance. And they all kind of seem to point towards the same thing. And basically what I found scared the hell out of me. We're in for some pretty serious stuff. The stuff you're seeing right now is just the beginning of it. And the thing that I find that is probably the most, what I tend to lean on the most or to believe the most, is what you're basically seeing here in front of you. The group in England took all the sunspot cycles that are one of the oldest scientific series we have on the planet. They go all the way back to 1400. And so they cataloged all these cycles, and what you see out of it is what's in front of you there. These are all the various cycles that they were able to identify. And what they did was they built an algorithm, which is in the book on Amazon, that points out to where they go. And their forecasts have been pretty damn good. So kind of the essence of it is that we are heading towards the coldest weather that we've had in about 300 years, actually since the time from 1790 to about 1820, which was called the Dalton minimum. And during that time frame, there was a lot of starvation, a lot of food shortages. In fact, in Europe, prices were so expensive that people ate their horses because they couldn't afford to pay for oats to feed them. That's how bad it was. And it was widespread throughout the world. And we're going to, based on these forecasts, we're going to repeat that almost identically.
So where do you live, Scott?
I live in Florida now.
Okay, and you feel that that's going to be an area that is, excuse the pun, whether this cooling, mini ice age, whatever we're going to have, is that why you're in Florida?
That's exactly why I'm here. I left Michigan a couple of years ago. The writing is on the wall. You're starting to really see it start to manifest itself right now. These polar vortexes that they're talking about will become more and more and more commonplace. We are just, I'm not going to give away all the book, but the first solar minimum low is due 2020, 2021. So you're not going to see the coldest in this particular cycle for another couple of years. So this is just the beginning of it.
Okay.
Technically, we have been cooling since 1990. If you look at this information,
so why are the polar ice sheets melting? If
they're not melting.
Yeah. Okay. So I just saw a news report last night that said there was a hole in one of the ice shelves that was the size of Manhattan, and that was going to contribute to a rise in sea levels. So you're saying that that's fake news?
Well, that's what I believe is fake news. Let's back the truck up here a little bit.
Okay.
Back when Al Gore, decided this was something that everybody should be aware of.
The internet. After he invented the internet.
Yeah, while he was busy inventing the internet and doing all this other stuff. Actually, there's a great video out from a group in the UK about what a joke this all is, but the bottom line was that he said that by 2014, based on all their evidence, that the poles would be melted. Well, that's kind of come and gone. And actually, NASA takes pictures, and last summer they, and we're waiting for the next one, but last summer they took pictures from space, and their report
that was the source of this. This was a source. They claimed it was a NASA source from, a satellite that showed this image of a gigantic hole in the ice sheets. That
was it in the Arctic or the Antarctic?
I don't know. I think it was in the Arctic.
Well, it's
okay. I'm not. But anyway, check it out.
First of all, let's go back and find out why all this started. This all started because somebody affiliated with Gore said, we need to figure out a way to raise more money for the government. So really what's been going on for the last since he started all this, is a move to try to convince the public that we're causing all this problem, all this global warming, and so we need to tax all the energy on the planet in order to stop this. It's been nothing more than a tax grab. And a lot of people were paid to write papers to promote this. My book was reviewed by Professor William Happer at Princeton, who said that my book had, you know, good merit and that there's a lot of truth to what we're talking about. And here's the bottom line. The bottom line is if the sun were to go out tomorrow, how much longer would the people on this planet last? Not very long. The bottom line is that big yellow ball in the sky, and you can see these cycles here, that big yellow ball, if we could take a picture of it for 3,000 years, like a movie of it for 3,000 years, and then back it up and run it at full, you know, at real fast speed, what you would see would be like a light bulb that would, you know, get brighter and dimmer and brighter and dimmer. And
cycles.
Exactly, like everything else that you, especially the people that are in the markets, know about. I mean, everything is secular.
All right, so I have a question. Solar minimums, maximums, they're normally, what, about 10 years?
The normal Schwab cycle is like 11 years.
Okay,
you know,
so
a little bit.
All right, so what makes this solar minimum so much different than the ones we've had in the past every 11 years?
Well, because as you can see by these cycles, there are other things that affect. Now, what causes this? Kind of common wisdom is that this has something to do with the big planets in our solar system, and that our solar system is much more electric and magnetic than people give it credit for. And so that when these big old planets are out there whooshing around through space, they change the electrical current in our solar system. And they believe that's what, see, sunspots are an indication that the sun is very hot.
Right.
And so if you go back and you look at commodity, now W.D. Gann, I'm sure some of you have heard of him.
Right. You know, if you don't learn how to change your mind, you won't have any change left. W.D. Gann.
Well, he was a pretty tremendous guy, and I learned a lot studying him for the last 40 years. But the solar,
you know what's interesting, Scott, and one of the reasons why I brought you in, because I've had a lot of guests talking about a Kondratiev winter, you know, and all of this, you know, with potential the end of the bull markets and stocks. But you know what you're predicting is more rare and unusual than predicting a stock market crash, which isn't that easy because it doesn't happen that often. So is this part of the Kondratiev winter, that it actually manifests on the physical plane so that the whole globe not only goes into an economic winter, but you're talking about it being a geological winter?
I believe both of those are correct, and I think they're interlaced. One's going to lead to the other.
How do we make money? How do we make money on this while we're, moving towards the equator? Huh?
That's a good question. And probably the way to do that is you have to remember that these 11-year cycles, we're going to have this first low in a couple, 2-3 years. That'll be a really, really cold time frame. Then we get a respite for 5 to 6 years, up into about 2025, 2026. And then the final push comes down where the sun should finally be at its coolest in about 2033, 2035. The other thing is that at that final low is that you'll have the cumulative effect of what's going on right now that's going to last another 15 years. And what's going to happen is, and this is a listen, I can tell you, I have spent many sleepless nights trying to figure out how this is going to manifest itself. But we could be anywhere from just, super high energy prices and super high food prices to all out anarchy. How do you know? There's no way to really predict. What happened in the Dalton minimum was And this is the big wild card of the whole deal, is that if you've been paying attention here the last 3 or 4 years, what's been going on? Volcanoes have been popping up all over the place, right?
Okay, yeah.
Okay, now there's a reason for that.
They cool
For a
the
couple
planet.
years-
They cool the planet, right?
Well,
The
yeah,
dust,
indirectly.
the
But
ash. Okay.
well, yep, it creates sulfur dioxide. But here's what happens. As the Earth cools, imperceptibly, it's shrinking. And so as it shrinks, just like if you took a balloon you blew it up in an 80-degree room and then took it out into a 40-degree temperatures, what's going to happen to that balloon?
Yeah.
It's going to shrink. Colder air contracts air, compresses it. And so what happens is during these cold spells, and this has been going on forever, is that the Earth imperceptibly shrinks. And when it does that, it puts pressure on the magnet chambers. And just like it happened in Hawaii last year. And it's been going on all over the planet.
And the fault lines. And the fault lines.
Well, when you get these kind of pressures, who knows what it's going to do to the our planet's still molten, metal in the middle of it. And so yeah, these pressures are there, but the point is that volcanoes and the activity and the continued activity and expanding activity are a sign that we're cooling. So here's the big wild card. The big wild card is the one out in Wyoming at the Yellowstone caldera.
Oh yeah, super volcano.
Yep. And what happened in 1815, speaking of super volcanoes, Mount Tambora in Malaysia or Indonesia exploded. It was so violent and so huge that it spilled all this ash up into the atmosphere, put all this sulfur dioxide up there, and that acts as a true greenhouse barrier. And so what happened is now the sunlight doesn't get through to the planet. And in 1816, it was called the year without a summer. They could not get crops to grow in New England. They would try to plant crops, and every 3 or 4 days there'd be a frost. It was that cold in June and July and August. And that was an ugly thing. Of course, people were much more self-sufficient back then than they are today. So how's this change? How's it play out? It's hard to know. One good thing is we have electricity. And that's I'm not calling for the end of the world here, but it could be that a lot of people are going to freeze to death and a lot of people are going to be hungry. And so some of the things that are in my book, just not only what caused it and, why it's happening, is how to deal with it and things that you should do to protect your family. Here's one of the things that's in the book that I recommended that people do 4 years ago. If you live in Kentucky or Tennessee or Missouri or Oklahoma or Kansas, those people are not used to dealing, or northern, Georgia. These people are not used to dealing with these really frigid cold temperatures. What do you think happens, like what's happened in the last week, to these people's homes that have well and septics?
Yeah. They're not functioning.
Their pipes freeze and they break. Okay.
Mm-hmm.
Now, if you happen to be, let's say you get a big precipitation event that blows in off of the Pacific, like we had happen last year, and you get a huge snowstorm in Kansas, and you got 1.5 feet or 2 feet of snow, and these people down there are not used to working in this kind of weather because they're not used to it. This is going to be very new. So let's say you're out of electricity for 2 weeks, and you don't have a well and septic, you don't have water, and you can't get to the market to buy food. You see where the problems lie here?
Yeah.
People need to, people need to prepare for what the potential worst can be, and that's.
So do you have MREs and freeze-dried food products to rely on?
Well, that's part of it. Yeah, there's other ways there's lots of different ways. MREs are expensive, but they're easy. And
what's the weather going to be like? What's the weather going to be like in Florida should this scenario play out? Is it going to be like
It's already
Chicago is
started.
now?
Dale, it's already, no, I don't think it'll be that cold.
Okay.
We've
How about
already
Southern
had a cold
California?
winter.
Southern California.
Well, fortunately, they'll be a little bit better off. Southern California, Arizona, Florida would be good spots to be, although there's not a lot of water in Arizona. But
Right.
because
Yeah, they're having
California,
water problems.
yeah, because California is on the Pacific Ocean, it tends to be a little bit warmer just from the sea breezes that blow in. It keeps it if you're near the coast. We've had a cool winter here in Florida already. I yesterday, for the first time in 10 days, was able to wear a short sleeve shirt. That's how cool it's been.
Right.
Surprising.
It's been cold. It's been cold here in California and Arizona this year too. We've had 20-degree nights in the deserts here. Let me ask you this: do you know if our president, who doesn't really, he doesn't talk about an ice age, but he's very negative, or is not a believer in global warming? Do you know if he is a proponent and knows about this kind of potential event? He actually put out a tweet. Joe Perry on our team shared it with me that with what Chicago was going through, that we need to send some of the global warming people there to heat things up a little bit. So I anyway, has he read your book?
He's got a set. Yeah, well, actually, I sent a copy to him and to Scott. I can't think of his name now. Scott, he is the EPA director, and so they've got it. Now, here's what you got to remember: is another third of the book is NASA oriented. There's some people there that are pretty damn smart. They know what's coming. It's public knowledge.
And they don't want to create any kind of panic, So I mean, there's so many scenarios like power grid failure, pole shifts, ice age, and what I like about the ice age is that it's just a cycle. It's just a cycle. The other is depends on some type of bad actors. So very interesting that you are doing this. Do you still trade, Scott? Do you trade the markets?
Oh, yeah.
You're pretty wrapped up.
Yeah, I went short
promoing.
yesterday. I think. I shorted the indexes yesterday. I had a high I forecast a high at 27.10 yesterday, and I think we're in for I think we're gonna. Well, it's more than that. I do astro work.
Okay. Okay.
Bradley
models.
Dan was an astrologer. I mean, I've studied him for a long time. But anyways,
okay.
Let me go back to NASA for a second. I do trade. Yeah.
All right.
NASA. There's a guy named Dr. David Hathaway who's a research scientist with NASA. And again, this is in the book, and for your listeners, it's called The New Ice Age: The Truth About Climate Change by me, Scott Yarbrough. It's on Amazon, $6. Hopefully you guys should trade enough money to be able to afford that.
Yeah, they should be after the week we've had.
All right. Because there's nothing better than making money in the markets. But he developed this technique a while back, and he found that because they watch the sun all the time and they're paying close attention to what's going on, he found out that there's like a conveyor belt that runs around like the center of the sun, and it moves the plasma around. It's kind of like, the sun is kind of like a boiling pot of water, and that it kind of has a pattern about how it works, and all this bubbling hydrogen and helium and everything. And so he found that this pattern, and they had watched it long enough that depending on the speed of what this conveyor belt was moving, gave them kind of a longer term look at what was going to happen to the temperatures of the sun down the road. Well, a couple, 3-4 years ago, he said, I've never seen it so slow.
Yeah.
It's as slow as we've ever witnessed it. Like 1 kilometer.
Yeah. I mean, last year I kept hearing about, we had all these massive solar storms that we were going to get hit with, I don't know, an F4. I don't know how, if that's even the right letter, but that there was going to be, that the sun was misbehaving and sending out these things that could affect our telecommunications. And that wasn't true either.
No, the solar flares happen all the thing, but they're kind of pointed, and so if they're shooting off on the other side of the sun, it doesn't make any difference. We actually are under right now, yesterday and today, which is probably to some degree has something to do with this little warming trend that's coming up through the middle of the country right now. Is there's a big hole in the center of the sun that's spewing out a lot of solar wind out right towards us right now, hitting us right now. There's a website called spaceweather.com, and you can go there and see about that. They watch all this stuff all the time, and so
Scott,
it has an effect.
Do you have a picture of your book on a slide or something, or show your website page that shows your book and a picture of you so people know how to get a hold of you?
You want to see a picture of me?
Oh, well, man. No, your book.
Don't scare me like that, Dale.
You asked for it, so it's a nice cover, and
How about this one? This is
all right.
This is the solar cycles. This is the 11-year cycle, and if you go back to the left there at 1990, that's where the sun was at its warmest, and you can see that you can see the peak there at about 200 on the index. Okay, so we're back down here near getting close to 2020 again. We're heading to the solar minimums. But the scary part is, and again, the forecast isn't on this chart, but if you draw up the next up move, it's going to peak about 50 or 60 at the peak of the next cycle. That's the forecast.
Looks like a descending triangle with a breakdown under zero that would get you negative 200.
Oh, let's not hope for that. That would be bad.
Yeah. Anyway, but nice. So, definitely lower highs. You could tell, it's weakening. Lower highs in 2000, and coincidentally, that was a .com bubble at the high up there in 2000.
Amazingly enough, it works with the economies. Here's now I know how to do this. Here's the conveyor belt thing that Hathaway talked about, and how they measure the speed of these movements of these branches of the conveyor belt. Let me see if I can find a picture of
do you know who Peter Temple is? Because he talks about this a lot. He's in Canada.
Yeah. I know who Peter Temple is. He's a pompous. Never mind. But
okay, all right. Yeah, I asked him why.
He seemed like he knew everything already.
Yeah, he went to New York to read Wheeler's manuscripts. I asked him why he was living in Canada, if he believed in this. Is Canada going to be better off than the U.S.?
Oh, hell no. Hell no.
Yeah, that's what that's what I thought. He said, well, it was an unusually warm winter up there. And anyway, people are very attached to where they live. Most people, let's face it, people aren't going to move because of this.
Well,
don't you think
what'll happen? And I think another winter or two of this, and people are going to sure question it.
You know what that is? That is true. I moved. I grew up in Chicago. I didn't like I didn't like the winter, Southern California.
Yeah, well, there you go.
20 years.
Yeah, that's a better spot to be because it will be warmer there, and a lot of stuff. The winds blow westerly.
But I'd be better off closer to the equator, wouldn't I? Like somewhere in Central America, where it's too hot now, like Panama. It might be beautiful there.
Panama, Ecuador, Costa Rica. Kind of the cool thing about those things is that you can drive from the ocean where it's 90 and up into the mountains and it's 70 in an hour. And it's kind of like being in Flagstaff and Phoenix.
Oh yeah, that's true. Yeah, I lived in Arizona for a while. That's what I would do for a respite. I'd go to northern Arizona. Our CEO lives there, so he knows about it. And it was cold in Phoenix and Scottsdale this winter. We were getting ice there. and ice here in Temecula. So what a great presentation. You know, I'm glad that you reached back to me, Scott. And what else you want to show us here?
It's the cover of the book.
Okay. Yeah, nice. Congratulations on, you know, taking the time. I know it's not easy to write a book, because I've tried it. And you really have to be passionate about the subject, and then to put your name at the bottom of it on a controversial type topic like this. You're a warrior, and I'd now like to call you my trading warrior brother. Now that I know you're top picking markets and you're a GAN guy, and Scott, I wish you a lot of success with this book. And you know, if 10 families take heed and this ends up happening, you've done a great work. So
that was my whole goal, was to try to warn the world of what's coming. So people spread the word, because you need to put food away, you need to put water away, you need to pay attention.
How about currency, Scott? Should everyone hold physical metals?
Well, I think being a stockbroker for a lot of years, precious metals should be a part of everyone's holding to some degree in the smaller denominations. But there are other things that are worth holding too.
Yeah, you can't eat gold.
You can, but it's not very nourishing.
Yeah, you'd break your teeth.
Well, but there's a place for it. It's like everything else. You want a diversified portfolio, but having number 10-pound cans of rice and beans in your closet is another thing that is something that you need. A way to get water, a way to purify water. I mean, I don't know.
Yeah, it's called. You need to be a prepper, basically, and
those people. We owe them a big debt of gratitude, because they have made it easy to go do this now. If you can we can buy this stuff online from Walmart,
right?
To get ready to do that, and so you want to plan for the worst and hope for the best. More importantly, is the market looks kind of sluggish here after this quote good news. And don't forget, folks, it's not the news, it's how the market reacts to the news that's important.
People who buy headlines today sell newspapers tomorrow.
There you go. You got that?
Scott, pleasure meeting you, and thank you so much. And everyone that is listening live or sees the video later, you could find Scott's book at Amazon. And you're not that active on Twitter. I'd give out your handle. I'll give it out anyway. The New Ice Age Now. Is that it? At the New Ice Age Now?
Correct.
Okay. Well, Scott, have a nice warm weekend. And it was, and you know what? It was really cool having you, man.
You used all the temperature jokes. I love it.
Have a great weekend.
Thank you, Dale.
You're very welcome.
Everybody take care and have a good weekend.
Yeah, and that's it, Face. Have a great weekend. Remember, don't just count your pips, count your blessings. And we'll see you on Monday. Good hunting the rest of the day. Adios, my trading warrior brothers and sisters, and you're welcome.